During the course of this semester, these Columbia MBA students are going to learn the hard way what it takes to be a good investor. There comes a time when you're not going to spend any more money on gambling, is what I'm getting at. Where are we in that cycle?
Well, I think...
Has that peaked, or is that still growing rapidly?
I don't think it's peaked, and I think what you're saying...
I don't know what you think.
No, but I'm going to tell you why. In Las Vegas, for example...
You're not going to tell what you think, you're going to tell what you know?
I'm going to tell you exactly what I know right now.
As a beginning investor, the first skill you need to master is to know that it's not easy making money, and it's dangerous. And what we're trying to teach our students is to know everything before you do anything.
The biggest person in this business is DeVry, and they report, and you don't even know that they report.
You want us to buy the stock?
Unacceptable. Unacceptable.
Just ain't easy getting rich. I'm Jim Rogers, and this is The Art of Investing.
On this edition of Art of Investing, Jim Rogers begins his discussion on analyzing companies, and later one of Jim's students presents his stock recommendation.
My name is Richard Shaw, and the industry that I am covering is the nursing home industry.
Stay with us. We'll be right back. This television program is based on an advanced securities analysis class taught by Jim Rogers at Columbia University in New York City. The information contained in this program is for educational purposes only. While you, the viewer, will hear many stock recommendations throughout this program, these recommendations are made by students of this class who are just learning how to analyze securities. We invite you to share in their learning experience. However, we caution you not to follow these or any other stock tips until you have personally investigated the recommendation at length. As Jim Rogers likes to say,
don't make any investment unless you know a lot about it, unless you know so much about it that you know you're right and that it's so right, and it's just like money lying in the corner. Well, all you have to do is go over there and pick it up because you've done so much work and you understand it so well that you know you're right.
While the techniques taught by Jim Rogers have proven successful for others, there are no guarantees. Therefore, Jim Rogers, the students, Columbia University, and the producers and distributors of this program cannot be held liable for any success or failure you, the viewer, experience as a result of using these techniques. If you decide to practice the skills taught in this program, you do so at your own risk.
We're going to learn how to analyze companies in order to make a lot of money in the investment world. To do that, you have to learn how to buy low and sell high. Now, everybody says that, but of course you have to learn how to identify what is low and what is high. The most important thing you're going to have to learn is to identify change. Because if you can find change before everybody else does and buy it, and it's positive change, you're going to make a lot of money. On the other hand, if you can learn how to identify change that's about to turn negative, and by change, I mean change which is going to go on for years. Let's not worry about next month, next quarter, even next year. Let's worry about a change which is going to be secular, that's going to go on for a decade or two or three. That's how you make a lot of money if you buy it cheap or sell it dear. Now, in order to identify change and understand change and find investments, you've got to understand the numbers. If you don't understand the numbers, you should not be in the investment business. I wish you were easy. I wish there were a pill you could take. I wish you could just do it on gut or feel, but you've got to understand the numbers. It just ain't easy getting rich.
Knowledge TV Retro, brought to you by Jones International University, the first fully online accredited university. Change your life for the better on your schedule. 8-week classes begin next month. Visit jiu.edu to find out more.
Perhaps the most important thing you need to understand is the numbers. You've got to understand balance sheets. You've got to understand profit and loss statements. Those are the ingredients that go into what we're going to do. By the way, who can tell me what a balance sheet is? Lisa?
It's the statement that shows a company's financial position at a period for I guess a snapshot, so it's a period in time, a particular moment in time.
Basically, it shows the company's assets and liabilities at any particular point in time. Now, who can tell me what a profit and loss statement is? These aren't trick questions, by the way. This is not a trick course. I'm not trying to fool anybody. This is simple stuff. We want you to learn. Leslie, what's the profit and loss statement?
Well, it reflects the revenues earned during a certain period, whether it's quarterly or yearly, the revenues and the expenses associated with those revenues, and then your earnings.
Did everybody hear that? Does everybody agree with that? Anybody disagree with that? Okay, basically Leslie's right. What it does, it shows what kind of income you've had in a certain period, and it shows what kind of expenses you've had and what the results, profit or loss-wise, are. So we're going to learn how, we're going to go through a lot of balance sheets, we're going to go through a lot of income statements, and you've got to understand. But you also have to read these annual reports. You've got to read these 10Ks. I will say to you that if you read the annual report of companies you're involved in, you will have done more than 95% of the people on Wall Street. I know it sounds staggering, but I suspect that anybody you run into after a few years, you will find that this is actually true. If you actually read the 10K, you'll do more than 98% of the people on Wall Street. Who can tell me what a 10K is? Leslie?
Well, 10K is like an annual report, but it has more information in it than an annual.
A 10K, the U.S. government, the SEC, requires that every publicly owned company has to file once a year a financial statement and a statement about its business. That's called a 10K report. It is a more detailed and elaborate description of a company. It frequently give you a lot of things in the 10K, which they don't give in the annual report. The annual reports are sent out to stockholders, and frequently management wants to make things look as good as possible in their annual report. The 10K, which they file with the government, is a legal document, and the government requires them to say certain things. What is your backlog, for instance? So 10Ks give you a lot more details than annual reports do. Every public company with over 500 shareholders has to file a 10K. They are frequently a source of enormous information. So if you actually, but they're a little drier than annual reports. They don't have pictures. They file with the government. So if you read the 10K, you're going to do more than 98% of the people on Wall Street. You're going to be way ahead of your competitors. Who can tell me what a 10Q is, by the way? Yes. What is your name?
Matt.
Matt.
It's
Matt.
Sort of an abbreviated version of the 10K that's filed quarterly.
A 10Q is, in fact, filed quarterly, and there's less detail. It's only the quarterly amount of information in a 10Q that's in a 10K. But it also will probably have more than just the thing that you report, that most companies report to the shareholders, because they try to put a fancy gloss on for shareholders usually. What we're going to do now is go through some of these things. You all have a sheet called the Insider History, Redmond Industries. What I want you to do for every company that you get involved with, starting with Servotronics, is I want to know what the insiders have been doing in that company for the last 2 or 3 years. Now, I want to know every time they sold. I want to know who they are, how much they sold, how many shares, in other words. I also want to know how much they bought. But, and this is important, because in there, it'll say if the chairman of the board exercised some options to buy the stock, I don't care. All I want to know on the buy side is if he took money out of his own pocket and went into the market and bought shares. Exercising options, gifts, any of that I don't want to know about if he took possession. I only want to know on the buy side if he bought it with his own money in the market at the market price. And when they're selling, I don't care how they sold it. If they gave it to their granddaughter so she could go to Columbia Business School, I want to know that. If he sold it in the market, I want to know that. Whenever somebody disposes of the stock, I want to know about it, however he gave it or got rid of it. Okay? And it'll be a sheet just like this. You'll get it out of the SEC filings. And you just go through and it's very simple. The guy's name, whether he bought it, whether he sold it, how many shares, what date, what price. For every company you get involved with and every company in your industry, we're going to need that. For every company you turn in a spreadsheet on, I want the name of the company on the spreadsheet. I want the stock symbol. Obviously, we're in the stock picking business here, so I want to know how to look it up. You want to know how to look it up. At the top of the page, you see the 3 zeros. That means all the numbers should be cut out the last 3 zeros in any company you get involved with. Don't, just for the sake of space. It doesn't have it on here, but it should. It's my mistake. It doesn't have when the year ends. But put that up here, because one of the first questions I'll give is when is the year? Because if most companies have a calendar year, but many companies have a fiscal year. So put it up there so we can all know, so we know what kind of thing we're talking about. Now, the first slide on this spreadsheet is, and you can see with this spreadsheet goes back to 1968. I want you to go back as many years as possible. Some companies you won't be able to go back more than 5 or 6. Some you will be able to go back 46. In your case, everybody's case, you need to go back as far as possible. You all have no historic perspective. Not your fault. You're only 26 years old. So you should try to get as much historic perspective as you can by looking at the numbers going back as far as possible. And in fact, you also have another thing I want you to hand in. These are these charts. If you see these chart prices that I have, I gave you 3 different ones just to show you they can come from anywhere. I want you to give me these for your company going back as far as possible, just so you know and I know what's happened to this company's stock price in the past. This is not a predictive thing. Again, this is to give you historic perspective. If you look at this chart of Redmond, the first one, one of them I gave you goes between 1977 and 1988. Well, you'll see that something happened to this industry to make this stock go up about 20 times, about nearly 20 times. Well, you don't know that in 1996 because you're 26 years old. But if you saw that chart, you'd say, well, I wonder why this happened. And if you know why that happened, it'll help you understand what's going on today. Likewise, if you get out the more recent charts, which I've given you, you'll see the same thing. Well, look at this. This stock did virtually nothing for a while, and then all of a sudden it started going through the roof. I wonder why. Why did that happen? A lot of what we're going to try to do in this class is figure out why. If you can figure out why, you've just about got most of the puzzle.
When the art of investing returns, a little theory goes a long way.
1993, I'm going to make the assumption that it's gone up, but I don't have that figure yet. I'm waiting to get that figure from
Richard, you are the analyst. What's happened with the company?
Stay with us. We'll be right back.
Well, I teach the class as a real-world situation. I teach them as though they came to work for me. And if they came to work for me, this is what I would set. This is how I would teach them the business, and these are the things I would have them do for me. I would have them start off doing simple analysis or simple fact gathering, and from there, I would then throw them in. I'd throw them in the deep end. I'd say, okay, you're now my analyst. You're my steel analyst. You're my cosmetic analyst, whatever it happens to be, and put them to work doing it.
My name is Richard Shaw, and the industry that I am covering is the nursing home industry. The recommendation is a buy on Beverly Enterprises. My recommendation has actually switched from previously from our last discussions after doing some more in-depth research into actually supply and demand within the nursing home industry. First off, in 1990, in terms of census figures, there are approximately 32 million Americans 65 years of age or over.
Well, it's 1996 now. What is the number now?
1996, we do not have sample data. Basically, as everybody knows, it's censuses are taken every 10 years. So we would have data. We have samples, and then they project out within the approximate number of years.
And using your 1990.
I'm using 1990 as the base reference year for.
Well, they laid it out for you, right?
They laid out 1990.
Okay. But John said, what was it, 1995?
In 1995.
You should be able to just look at your 1990 data and just go over to 1995.
But go back and look at the number of people born in 1925 and the number born in 1930.
I could have put those in. I didn't think they were relevant as in terms of what they were today. I thought actually the growth rate was more important than the actual figure itself. That's why I kept
very necessary.
And for the next presentation, I will map out each
Thank
year.
You.
Okay. So basically, I was just trying to plot out to show you that the growth.
And by the way, that will be extremely useful and important if you do it. So be sure to do that.
I will definitely do that because what I was trying to show was the actual, with the growth figures for the number of elderly people between the ages of 65 and the number of people between the ages of 85, the number of beds which are available, and the decrease in beds, which is as a ratio.
Right. But when do people go to nursing homes?
Usually they go.
65-year-olds don't go, do they?
Actually, they do. After the age of 65, there's a 43% chance of going into a nursing home, and this peaks between the ages of 75 and 80.
And is that percentage going up in time or down? Has that gone up and down?
As in time, from 65 on, that percentage does
10 years
increase.
ago, would you have a higher or lower propensity if you were in that age group to go into a nursing home?
It would be
in 1985, was it 75% of those people went into nursing homes?
I don't have that relevant figure, but in terms of making an
But
assumption,
you understand that's important because maybe something is going on within the industry.
Well,
People say, I'm not going there. I got to stay home.
As we all know, within the industry itself, is that we as Americans are living longer. We are having longer longevity. We're living longer in terms of.
But you said basically people go between 75 and 80 now.
Yes, there's a higher probability of going.
Okay, they start at 65,
yes,
but not many go at 65 apparently as you get older. So we need to know. But has that changed? 10 years ago, did we go when we were 65, or did we go when we were 95? Has something happened at the industry? Maybe we don't like going to them anymore. Maybe we are.
It's not a point of the person wanting to or not wanting to go. It's because it's a necessary evil. I mean, if you want to say,
is the incidence of Alzheimer's or these sorts of things going up in the population or down the population? I'd like to know, 10 years ago, did 53% of these people go in, or 63 or 33? Is it going up or is it going down? That is, the number of people in this category ending up in a nursing home going up and down. That's all I want to know. I want you to get me that fact.
And I want to know why they go, because if they discover a cure for Alzheimer's, won't that be
and that's I would say that's very unlikely.
But they just came out with it. They just found something.
Okay, well
let's find out why.
I would like to know why they go.
Right.
Number 1 reason, Alzheimer's. Number 2 reason, fractured hip. Number 3 reason, children don't like them. Whatever the reasons are, I want you to get us those numbers.
And if the number 1 reason is Alzheimer's, I want you to tell me if there is a cure for Alzheimer's looming, or if there's not one looming, or if it's broken hips, is there a cure for broken hips coming?
Well, from my studies and from my research, what I found is that the number of beds have actually been decreasing.
That's supply. That's supply. We want to know about demand. We're working on demand right now.
And we need to know who uses them, why they use them, and how they're going. What's going to happen to that group?
We know
in the
who
future.
uses them. We
know it's old, but
well, no, we know the actual age group and we know the percentage.
But we don't know
if
that's
changing.
We
don't. We need to know if that 43. I want to know if that 43% for the is going up or down.
Now go to supply. Okay?
I understand what you're saying is that in terms you want to know what the 43% was 10 years ago.
Well, we want to know.
Are you and I going to end up in a nursing home in 40 years? That's all I want to know.
Are you going to go when you're 65? Or are you going to go when you're no? But maybe instead of going at 65,
it doesn't look like I'm getting out of here tonight. But you know.
Maybe instead of going at 65, you're going to go at 85. Maybe at 95. Maybe something's happening.
You understand why this is relevant too? Because if you go when you're 65 and your average age longevity is 85, you're going to spend 20 years in one. If you start when you're 73 and your average longevity is 75, you go for 2 years, and it makes a big difference in terms of the utilization of beds.
That's why we want to know. That's one of the reasons we want to know the numbers. But the demand. Go ahead with the supply. I guess is where you're going, right?
Yeah, that's why I've been trying to get there.
It ain't easy, is it? It just ain't easy getting rich, Richard. I know.
Okay, in terms of the supply of the capacity of nursing facilities to meet the services of the elderly population has been strained. As you will see in my in one of my following charts, you'll see the growth patterns as the ratio of nursing facility beds to the number of.
Do you just have the number of beds?
I have the number of beds also.
Is that going up or going down?
Total number of beds, it depends on which state you're looking at. It's
the nation.
Actually, number of beds, I think, is going, it's decreasing.
I don't know what you think. Is it going up or going down? Well, why don't we have a total number here? Because if I don't want to go to the nursing home in Maryland, I could go to one.
This is where my argument is.
We'll start with on a national level.
Yes. You know, if we're looking at supply, we need to know the total number of beds. Because I can go to bed
actually,
lots of places.
It's increased in terms of the total number. It's gone from 1978. It's gone from 1.3.
Where are you now?
Table 3.
Now, this is the number of licensed beds.
That's the number of licensed beds and the number of facilities within the U.S.
Where's the number for 1995?
There is no number. Basically, the latest data which I could get from the National
that association.
Exactly, that association. 93 was the latest data I could get. I'm waiting in another 2 weeks. I potentially might be able to get 1995 data, but that's if it's released.
So for the 12 years between 1978 and 1990, it went up 350,000 beds, and from 1990 to 1993, it's gone up 80,000 beds. We don't know that. Since 1993, has it gone down or has it gone up?
1993, I'm going to make the assumption that it's gone up, but I don't have that figure yet.
Well,
I'm waiting to get that figure from.
But Richard, you are the analyst. What's happened with the companies?
How many
well, what's
companies are
happening is that how many number of public companies? There's tons from. I have the list of top 50. Actually, the top
beds.
26.
Have their beds gone up or down?
Certain companies, their beds have gone up. Others, their beds have gone down. Beverly Enterprises has decreased their number of beds in order to restructure and reduce their costs.
We see here that the number of beds up through 93 have been rising every year.
Yes, they have.
Now, we don't know whether it's gone.
But if you look at the number of beds, as the ratio of number of beds, that's actually been decreasing because there's more elderly people out there. And this is what I'm saying. There's pent-up demand.
We understand that, and that's a good point. That is a very good point. But I need to know what's happening now. And if you had looked at the capital expenditures for these companies?
The capital expenditures for Beverly Enterprises has been increasing.
What about for the five largest companies in the industry?
For Manicare, it's also been increasing. That is
who's the largest in the industry?
Beverly Enterprises.
Who's second?
Manicare.
Who's third?
No, first largest is Beverly. Second largest is Hillhaven, which was just bought by Bencor. Third largest is Manicare.
And has Hillhaven increased or decreased?
Hillhaven, since it was just bought by Bencor, I'm still trying to get their all the rest of their data.
So you're getting some good stuff, but it's missing just that final extra point. You're going in the right direction, but we need to know. You're talking about 1993. I want to know how many beds are going to be in 1998.
But in 1995 and 1996, 1998. 1996's data is not available. 1995's data is not available.
Wait a minute. You're telling me the industry's getting tighter and tighter and tighter, but these guys are closing down the beds.
They're reducing the number of beds to reduce costs. They've had a number of different problems. They've had a number of restructurings. And
can you tell me if the number of beds in the industry will be higher or lower in 1998?
In 1998, I will tell you, from my research, I think the number of beds will be higher.
At Beverly?
At Beverly, I think the number of beds at Beverly in 1998 will probably be lower.
You said you would be able to tell us how many old people there will be in 1998 and what determines whether they go to the nursing home. We would also like to know how many beds are going to be. Is it going to be, if the number of old people is going to go up 6% and the number of beds is going to go up 18%, I don't want to buy any stock.
When the Art of Investing returns, some final thoughts on supply and demand.
I don't spend a lot of time on supply and demand. I spend all the time on supply and demand because that's where you're going to figure out whether an industry is going to do better or whether a company is going to do better or do worse. It's that simple. Nobody has ever been able to repeal the laws of supply and demand. The Democrats can't do it. The Republicans can't do it. Communists couldn't do it. The capitalists can't do it. If you figure out when there's a supply shortage coming, you're going to make a lot of money. You can figure out when demand is when demand is going to start disappearing. If you sell something short, you'll make a lot of money. You've got to understand the supply dynamics. That is, that's what economics is. That's what the world, not just economics, that's what the world is all about. You've got to understand supply and demand.
Knowledge TV Retro, brought to you by Jones International University, the first fully online accredited university. Change your life for the better on your schedule. 8-week classes begin next month. Visit jiu.edu to find out more.
Unacceptable.
Just ain't easy getting rich. I'm Jim Rogers, and this is The Art of Investing.
On this edition of Art of Investing, Jim Rogers begins his discussion on analyzing companies, and later one of Jim's students presents his stock recommendation.
My name is Richard Shaw, and the industry that I am covering is the nursing home industry.
Stay with us. We'll be right back. This television program is based on an advanced securities analysis class taught by Jim Rogers at Columbia University in New York City. The information contained in this program is for educational purposes only. While you, the viewer, will hear many stock recommendations throughout this program, these recommendations are made by students of this class who are just learning how to analyze securities. We invite you to share in their learning experience. However, we caution you not to follow these or any other stock tips until you have personally investigated the recommendation at length. As Jim Rogers likes to say,
don't make any investment unless you know a lot about it, unless you know so much about it that you know you're right and that it's so right. It's just like money lying in the corner.
Well, all you have to do is go over and pick it up because you've done so much work and you understand it so well that you know you're right.
While the techniques taught by Jim Rogers have proven successful for others, there are no guarantees. Therefore, Jim Rogers, the students, Columbia University, and the producers and distributors of this program cannot be held liable for any success or failure you, the viewer, experience as a result of using these techniques. If you decide to practice the skills taught in this program, you do so at your own risk.
We're going to learn how to analyze companies in order to make a lot of money in the investment world. To do that, you have to learn how to buy low and sell high. Now, everybody says that, but of course you have to learn how to identify what is low and what is high. The most important thing you're going to have to learn is to identify change. Because if you can find change before everybody else does and buy it, and it's positive. During the course of this semester, these Columbia MBA students are going to learn the hard way what it takes to be a good investor. There comes a time when you're not going to spend any more money on gambling is what I'm getting at. Where are we in that cycle?
Well, I think...
Is that peaked, or is that still growing rapidly?
I don't think it's peaked, and I think what you're saying...
I don't know what you think.
No, but I'm going to tell you why. In Las Vegas, for example...
You're not going to tell what you think. You're going to tell what you know?
I'm going to tell you exactly what I know right now.
As a beginning investor, the first skill you need to master is to know that it's not easy making money, and it's dangerous. And what we're trying to teach our students is to know everything before you do anything.
The biggest person in this business is DeVry, and they report, and you don't even know that they're reporting.
You want us to buy the stock?
Unexpected change, you're going to make a lot of money. On the other hand, if you can learn how to identify change that's about to turn negative, and by change, I mean change which is going to go on for years. Let's not worry about next month, next quarter, even next year. Let's worry about a change which is going to be secular, that's going to go on for a decade or two or three. That's how you make a lot of money if you buy it cheap or sell it dear. Now, in order to identify change and understand change and find investments, you've got to understand the numbers. If you don't understand the numbers, you should not be in the investment business. I wish you were easy. I wish there were a pill you could take. I wish you could just do it on gut or feel, but you've got to understand the numbers. It just ain't easy getting rich.
Knowledge TV Retro.